Hey guys, welcome back to Library of Wealth. It looks like Sam Bankman-Fried is back. This time, he responds to his role in the FTX collapse and takes aim at Binance CEO CZ. Yesterday, in an attempt to defend himself, and after pleading not guilty to charges of fraud and money laundering, SBF has now taken to Substack to give new information on exactly what happened. After launching a subscription service that you can pay a monthly fee to support SBF, which seems rather bizarre, it looks like Sam agreed shortly after posting, saying, "Whoops, that was unintentional, good catch, think there shouldn't be a paying option anymore." Now, whether or not that was intentional, we don't know. With the heading FTX Postmortem Overview, Sam Bankman explains how FTX effectively became insolvent. He also compares the FTX saga to that of Voyager and Celsius. SBF cites three reasons for the collapse of FTX. The first is the rapid growth of Alameda's balance sheet, which had reached approximately $100 billion in assets, $8 billion in net borrowing, and $7 billion in liquidity on hand. Now he's mentioning Alameda initially, which already attempts to deflect blame, especially on the heels of Alameda's former CEO, Caroline Ellison, pleading guilty for her involvement in defrauding investors with FTX. Sam downplays his relationship to Alameda, saying, "They failed to sufficiently hedge their market exposure, and that over the series of 2022 for both stocks and cryptocurrency, that led to an 80% decrease in the market value of its assets." The third point, and probably the most telling, is that in November, there was an extreme quick targeted crash precipitated by the CEO of Binance, making Alameda insolvent. Just based on these three things, Bankman-Fried doesn't take any ownership whatsoever over FTX's collapse. He puts the blame on Alameda, the market, and aims directly at Binance CEO CZ. Then he says Alameda's contagion then spread to FTX and others, similar to how Three Arrows impacted Voyager, Genesis, and many others. SBF now switches gears and takes the focus off the funds that were lost and notes that the post is specifically about FTX International's insolvency and not FTX US, which he claims is fully solvent and has always been. This is something he mentioned frequently during his press interviews before his arrest, that FTX US was fully solvent, and expressed confusion as to why the money couldn't be returned back to its users. Bankman-Fried goes on to say that after resigning as CEO, when he passed off FTX US to Mr. Ray, it had over $350 million in net cash. Then he provides a record of FTX US's balance sheet when he handed it off, which shows just over $350 million, and says it's ridiculous that FTX users haven't been made whole and gotten their funds back. Despite the available funds provided here, it still doesn't explain why FTX still filed for Chapter 11 bankruptcy. SBF goes on to state that FTX was run outside the US and takes aim at the lawyers for FTX and the many conflicts of interest that existed. He raises the question of the remaining $8 billion in assets that were seized during the bankruptcy proceedings and points back to the new CEO, John Ray, who's now running the operation. Bankman-Fried says that in the last few days of operation, in the post-Chapter 11 filing, there were potential funding offers that included signed LOIs worth over $4 billion. He believes that if FTX International were to reboot, it could have provided financing to make customers substantially whole again. In a chart that shows FTX's liquidity, around May of 2019, they used to be largely dependent on Alameda, but noting by 2022, they had diversified to only about 2% of their volume. Here, Sam seems to be drawing a distinction between FTX and Alameda and separating the two, despite his relationship to Caroline Ellison, and despite being a co-founder of Alameda, he claims to not have knowledge of what was going on there. He says that FTX International and Alameda were both legitimately and independently profitable businesses in 2021, and because there was still some dependence on FTX from Alameda, over the course of 2022, Alameda declined by 80%, which obviously affected FTX. This is where Bankman-Fried starts to address the allegations of theft of users' money. He says he didn't steal funds and certainly didn't stash billions away. He knows nearly all of his assets were and still are utilizable to backstop FTX US customers and has offered to contribute nearly all of his personal shares in Robinhood to customers, or 100% if the Chapter 11 team would honor that. Now, SBF is further asserting that he didn't steal any funds, which doesn't match the company records or executive accounts of what the money was spent on. This does appear to be more doubling down on his plea of not being guilty. He does state that this is coming from approximations, and that because many of his personal passwords are still being held by the Chapter 11 team, and that a lot of this is pieced together coming from models and approximations that were generally based on data that he had prior to resigning as CEO, and some modeling and estimations based on that data. He also makes a point to note that he hasn't run Alameda for the past few years. It could be that SBF is trying to further distance himself from Caroline Ellison after she pled guilty for her involvement in the FTX collapse. Sam says that while Alameda's net asset value was growing, FTX was becoming less dependent on Alameda, and when the 2022 market crash occurred, that caused Alameda's net asset value to crash 80%, ultimately having a strong impact on FTX because they still did have some dependency on it. He references other crypto platforms that had become insolvent due to margin positions blowing out and blames Binance CEO CZ in an attempt to bring down Alameda Research. SBF says a run on the bank that was caused by CZ required immediate liquidity that Alameda no longer had. He says even then, he feels FTX could have made customers whole if there was a concerted effort to raise liquidity, and that over $4 billion had been offered in the Chapter 11 process. He also admits he's been regrettably slow to respond to public misperceptions and material misstatements, and it took him some time to piece together what he could, along with not having access to much of the relevant data, as well as Alameda Research, which he claims he wasn't running. He continues to state that FTX US customers could be made whole today because the company is still liquid. SBF is insistent that through the Chapter 11 process, if they simply raise the $4 billion that's already been offered, the international customers could be made whole as well. He does say a lot of this is based on estimations because he doesn't have access to the relevant data. And despite not giving his testimony on December 13th, this substack is essentially the beginning of his defense of what happened to Alameda, FTX US, and what led to the Chapter 11 bankruptcy proceedings. I think we'll be seeing more from Sam Bankman-Fried on Substack soon, but the timing of this is still concerning, given all the information revealed about his political donations, properties, and where a large percentage of funds were spent. Now we're seeing not only a protection of Sam Bankman-Fried by the media, but the fact that he was granted bail with the contingency that his parents' house be put up as collateral, even though the value of their home isn't anywhere near 10% of the $250 million price he was set free on. This shows that someone at the top, with a great amount of pull, is orchestrating the main mechanism of the case against SBF. Many speculate the reason he wasn't allowed to testify directly after the FTX collapse was because he had incriminating evidence on many bad actors, and the collateral damage was being kept to a minimum. After a recent request for a judge to keep confidential the identities of two individuals who helped him secure his $250 million bail, Sam Bankman-Fried was notified that the US government is moving to seize more than $460 million worth of Robinhood shares as part of the fraud case against him and other FTX officials. The government is also taking control of assets and bank accounts that were part of a bankruptcy case involving one unit of the FTX empire in the Bahamas. One thing that still baffles investors is why Sam pled not guilty to the charges of wire and securities fraud, with the overwhelming amount of evidence stacked against him. We'll have to wait and see. What do you think of Sam Bankman-Fried's new information? Is it a distraction from the legal proceedings? And what do you think happens in court? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.